In this short video, I will share with you an effective trading indicator that can help you to detect high winning rate trade setups in the market. This powerful trading indicator is called the Point of Control V2, POC. This technical indicator is effective to help detect volume breakouts in the market. It is also a good technical indicator for riding trends based on swing trading strategy. As you can see, this trading indicator plots steps like a ladder along price movements based on volume breakouts on the price chart. To apply this trading indicator on the trading chart, type the keyword Point of Control V2 on the indicator search section here, and select the Point of Control V2 EP version by John Barron under the Community Script folder. Before I show you how to implement this trading indicator, it's important I explain some of the parameter settings of this trading indicator. Here are the main parameter settings of this trading indicator. Make sure to tick all so as to make the parameters of the indicator appear on the chart. The Reset Trigger section allows the choice of reset of the study period, day week, or bars. This is simple enough to expand to other conditions. The candle count of the resets starts from the beginning of the data set, bar index equals 0, versus bars back from the end of the data set. A period in this context is the time between resets, the start of the POC, for example, the start of a day or week, until it resets, for example, at the beginning of the next day or week. The period automates the determination of the increment level rather than the user specifying ticks or price brackets. And it does not allow for setting the number of rows and then calculating the implied price increment levels. When a period is complete, it often is useful to look back at the POCs of historical periods or extend them forward. This script will find the historical POCs around the current price and display them rather than extend the historical POC lines to the right. This script also looks across all the period POCs and identifies the master POC, or what it's called, the grand POC, and also the next 3 runners-up POCs. This indicator is also available as a library. Under the Style folder, you can tweak the color settings of the indicator's parameters to the color of your choice. Uncheck the HIST_POC above and below. This trading indicator is suitable for scalping, day trading, and swing trading, but will give the best result when applied as a swing trading strategy. Take note, make sure you apply the Point of Control V2 indicator to trade in the direction of the trend, no matter any type of trading methodology you wish to execute in the market. Alright, with that being said, it's time I show you how to apply this indicator to detect trade setups in the market. To ride a bullish trend. Step 1. Watch out for a bullish trending market. Step 2. Patiently wait for a bearish pullback to the lower bound line. Step 3. A bullish close above the grand POC line will give confirmation of the continuation of the bullish trend. To manage your risk, use the POC line that is below the grand POC line that gave the bullish confirmation as your stop-loss level for the buy setup. Ride the trend up and exit whenever the price hits the yellow POC line. Alternatively, aggressive traders willing to trade the bullish breakout trading strategy can buy the strong bullish close of price above the next grand POC line in the uptrend, and then place their stop loss below the low swing of the lower bound that led to the bullish candlestick price breakout. Breakout strategy traders can trail their profit to the low of each successive bullish candlestick close of price above the next grand POC line in the bullish trend. Master the trend following strategy of the point of control V2 indicator before proceeding to trade the reversal trends. To anticipate the reversal of a bullish trend into a bearish trend, make sure there is a total change in the higher-low swings of the POC blue line lower bound into a lower-low swing. Also, the change in the higher-high swings of the POC upper bound line into a lower-high swing will confirm the change in the bullish trend into a bearish trend. To ride a bearish trend, Step 1. Watch out for a bearish trending market. Step 2. Patiently wait for a bearish pullback to the upper bound line. Step 3. A bearish close below the grand POC line will give confirmation of the continuation of the bearish trend. To manage your risk, use the POC line, which is above the grand POC line that gave the bearish confirmation, as your stop loss level for the sell setup. Ride the trend down and exit whenever the price hits the yellow POC line. Alternatively, aggressive traders willing to trade the bearish breakout trading strategy can sell the strong bearish close of the price below the next grand POC line in the downtrend, and then place their stop loss above the high swing of the upper bound that led to the bearish candlestick price breakout. Breakout strategy traders can trail their profit to the high of each successive bearish candlestick close of the price below the next grand POC line in the bearish trend. To anticipate the reversal of a bearish trend into a bullish trend, make sure there is a total change in the lower-low swings of the POC blue line lower bound into a higher-low swing. Also, the change in the lower-high swings of the POC upper bound line into a higher-high swing will confirm the change of the bearish trend into a bullish trend. Then you can repeat the bullish continuation strategy to ride the trend. As you can see, Point of Control V2 POC is a trading indicator for detecting high profit trade setups in the market.